we back again, banging and crashing the market. And this is part two of TDI that I posted last week. And I want to do a 10-minute tutorial of how to utilize a TDI successfully. Okay, so here it is. In fact, this is the exact screen that we were using last time. So for you to use a TDI well, you can use the TDI in 1 minute to catch spikes, but you must be having prior knowledge of having, of knowing how to analyze the market and some price action and some support and resistance. You must be able to do that beforehand. You must know your market. But somehow, if you don't have that knowledge or you don't know how to do the support and resistance on your phone, here is the simplest thing that you can do. For boom and crash, you can do on a 15-minute time frame. So here we go. 15-minute time frame. There it is. Now, this is the secret here. And allow me to use this is a crash 500. Allow me to use the crash 500, but it will be more or the same in all the currencies because, all of them are either booming or crashing. These are the arrows that we were using last time and the symbols and everything. So let me delete them so that we can start our lesson. Here they are. Delete, highlight all, delete. So we now have a clear chart again. And should we also take the Bollinger Bands? I don't think it's so much disturbing. It is good to use what is clear for you, like, you can clearly read the market and see where the candles are moving and everything. So here it is. We are on a 15-minute time frame. Now, as I told you the other time, the golden line, this is the RSI 13. That RSI 13 is what shows us the real price of the market. Okay, the blue Bollinger Bands, it shows us the volatility of the market, and especially it will show you roughly how many players are in the market. Like I told you last time, when it is trying to squeeze like this, then you know that it will break free from that zone and try to move out or break the previous levels that it had been resisting. Like it's telling you, we want to move out of this zone. Okay, so anytime you see the Bollinger Bands trying to come together like this, know that the market will move out of that zone anytime. Now, for this tutorial, I will be showing you just specifically how to catch spikes, but not catching one spike like in the 1 minute time frame. This will show you how to catch consecutive spikes, or being in the market for at least, like 1 hour to 3 hours. Sometimes it will depend also on how your market will flow. So here we go. Okay, I'll just pick another arrow. Now, let's look at the golden line. That's our golden line. Anytime the golden line goes out of the upper, now here we are looking for sell positions. So the market has gone out of the upper Bollinger Band. It is outside. On the normal TDI language, it is always called, the outside the blue zone is called the water. So it is called shark fin. or it has protruded into the water. Like take the example of the Bollinger Bands. Outside, anything outside of the Bollinger Bands is in the water. So anytime the market is outside of the Bollinger Bands, in the TDI language, we say it is in the water. Okay. So anytime the market goes out of the water, like this zone that I've pointed out here, let me put another one. Sorry. I didn't want to change the time frame. I just wanted to pick an arrow. Oh, sorry. What am I doing? Sorry for that. I'm going back to look where we were, because there was a very strategic position that I had seen. Strategic. Oh, here we are. This. So the market line, or the not moving average, the RSI has gone outside of the Bollinger Bands. So that gives you a very clear, very clear indication, or we call that in the TDI language, it is in the water, shark fin in the water. Okay, so immediately after that, the market will enter into some point where on the RSI we are not seeing much movement, yet in the main screen window we are seeing a lot of, the market is still spiking downwards. Okay, so when the TDI or the RSI in the TDI is not correlating with what the main chart is saying, that tells you that I called it last time a divergence. So you can still use a divergence to trade. Okay, you can still use a divergence to trade, and here is a very good example. We take a line, this line. So here, sorry, there, another line, there. So you see a very big difference of what is happening on the main chart, and what is happening on our lower chart. Like it is not agreeing. The top one is facing down, the down one is facing diagonal. So we say, because of that difference, from there the market will be pointing upwards. So from that moment you can start scalping going up. Okay, but now for this tutorial specifically, I want us to focus on how to use a TDI to catch spikes, but catching spikes now which is going down for some time. Anytime this TDI window, this blue line, this Bollinger Bands is above level 50, we know we've entered officially into a buyer's area zone. So if the RSI is outside of the Bollinger Band, and this is what I'm talking about, sorry, where I just pointed out earlier, this is what I'm talking about. So it is outside of the Bollinger Band, but it is still mostly around the 50-60 area. Now, if we continue up here, we have like less than 5 to reach 70. So maybe that is around 65, and still it is outside of the Bollinger Band. It is a, shark fin, shark in the water. So at that time, you wait for the market like to come back into the Bollinger Bands. Do you see where it is moving back into the Bollinger Bands? So immediately after that, it moved back into the Bollinger Bands. there. And then as it went now again trying to go outside of the Bollinger Bands, it was resisted at the top of the Bollinger Band there. It was resisted. And from there, the market started coming down all the way. Okay, it came down all the way. So where is your exit point? The exit point is supposed to be here. No, just a minute. Yes, the exit point is supposed to be where I've pointed. When the market is starting to go back into the Bollinger Band. So you place your trade here and you exit your trade here. Okay, so you place your trade, the first resistance it hits after either it comes back into the Bollinger Band. So there are two resistance points here, but you use the first one. Okay, so the first peak, which is this here, you can't use that because no, this other one. Yes, you can't use that because it was still outside the Bollinger Band. It had not come into the Bollinger Band. So, sorry again. This is another situation again that is so good. This is another situation that is so good. Okay, see this. See where we are heading. See, we've already reached level 80. And then from there, sorry, what is happening today? We are almost here. This was it. No, it was not this. This here. So, you see this? It went out of the band and then it started coming back into the band. And already the market at this time is at level 8. Okay, so it is way far above what we wanted, which is level 70. So it is already telling you we are the overbought level. So it comes back into the Bollinger Band, and immediately after coming back, as it was trying to go up, oh, again here, as it was trying to, let me bring my arrow downwards so that we can be able to do you see the way it was resisted by the moving average too? Okay, so it came back into the Bollinger Band. The shark fin outside the water came back into the Bollinger Band. After coming into the Bollinger Band, it crossed a bit the moving average too, which is the aqua line in our place here. So after crossing the moving average too, it tried again going up, which is now the upper Bollinger Band, and then the moving average too gave it some resistance. And then from there now, the market came crashing all the way down. Can you imagine how many pips that was? Yeah. So if we take it from, you could have placed your trade somewhere there. Or even if take it you miss the first spike, which was this. But of course you would not have missed the entire spike, because remember this is a 15-minute candle, and so maybe the first indicator candle of a reversal happened, and it crashed like 10 10 pips below. So it must have given you an indication that we will be crashing, or the moving average to the sky blue line down would act as a resistance. So, okay, let's take it you didn't manage to get the first spike, but you got from the second one, of which now, let's say from there, and came all the way down, all the way with it, which your leaving point was supposed to be here. Okay, according to the, I told you the exit point is where, when the shark is coming out of the water, coming back into the Bollinger Band again. Okay, so that was supposed to be your to be your exit, this exact place, when the price is coming back into the Bollinger line, into the into the Bollinger Band itself. So you took your point, you took your trade when the where my arrow is placed, according to moving average 2 acting as a resistance, and you left the market when the when the RSI 14 is coming back into the band. Okay, so that was one trade setup that you could have caught more than, how many candles are those? 1 1 2 3 4 5 6 7 8 9 10 11 12 13, around 13 candles of 15 minutes each. That is a whole 3 or 4 hours. Okay, so imagine being in the market, crashing it for a whole 4 hours, and you are not in loss. You are not experiencing any, because when the market starts crashing on the higher time frame in boom and crash, it always crashes. It's not like you're trying to I don't know how to put this, but the normal currencies, which is now, the USD, USD CAD, USD JPY, whatever, it always takes time before it picks momentum. So for boom and crash, number one, it respects the supports and resistance very much. It respects that. So the moment you know your price action, you can really do very well with boom and crash. Secondly, boom and crash respects also, apart from the support and resistance, it also respects reversal points or reversal zones. So using things like TDI, it will respect. Using things like Bollinger Bands, it will respect so much. Okay, and when the market starts crashing, it will crash like this 12 candles from here all the way to here. 12 candles dropped, a drop that had been covered from here, now scalping from here all the way, which was like almost a full day or something. So you can imagine it had been going up for a full day, and then the next minute you see it starts now crashing from there, and for the next 10 candles it's crashing. 15, yeah, for the next 10 candles it's crashing. So you can imagine market that has gone up the entire day, and then it will crash within 2 hours. It has covered back that market. So if you are good enough, like you know how to use support and resistance in boom and crash, you're good to go. Okay, you are good to go, like trading boom and crash, trading the spikes, and especially in the higher time frame. You are able even to triple your account more than 3 times in a day, and it's very possible. I always do that. It's not hard, it's not difficult. Okay, let's look for another setup to see if our judgment or whatever we use in the market is right. This is another situation that would have presented itself very well. Let me bring an arrow. Do we see that there? Our RSI went up to the way up to 70 level. Very clean, very clear. Number two, in a TDI language, we say it is the shark fin or shark fin, it is already in the water. It is outside of the Bollinger Bands. So as it was moving, now another secret, let me give you a very simple other secret. If or when the RSI goes out of the Bollinger Bands in a very sharp manner, like the bands were not moving with it, like the RSI itself just shoot out of the band and went straight up. So you find there's a sharp angle here between the blue line and the golden line, like an angle of 45 degrees. So you know, like after 3 or 4 candles, it will be dropping back, okay? And the dropping back will be, as much as it will not be long because it's not traded going up for a very long time as well. So it will crash, but it will not crash like the previous signal that we've seen, okay? So here we go. And so the first sign that was supposed to show you a drop was this. You see? The first spike. Sorry, another again. Sorry for that. Here. This is what we are talking about. That first crash was an indicator telling you that anytime we can be coming back down. Okay, so here now the best indicator for you was to wait for the next crash. Like, don't go into the market immediately. So when that big crash started coming, I know it is a 15-minute candle, so it didn't come down all the way, but immediately the first crash happened, and here you saw the signs of it coming into the band again. You are supposed to place your trade. Okay, so you could have caught it very well where the arrow is pointing and come with it down up to here. Okay, as it is going back into the band again, that is where you are supposed to exit. And if we bring our cursor here, so that is where you are supposed to have entered the market and left the market there. That is where you are supposed to have left the market. Can you see all those pips? From here somewhere here, coming all the way down to here. Yeah, and that is basically like a 2-hour trade. Yeah, because every candle is 15 minutes. So basically that is a 2-hour trade. And mark you, this is a trade where during all this time you are in profit. Okay, you are not having any, like, zero drawdown. Okay, you entered into the market immediately, you entered into the market immediately, and from there you started being in profit. You know, you are showing blue all the way and held your trade for more than like 3 hours or so. That is another trade there. Let's continue. If you also wish to do some scalping, or you buy crashes, check this. Let me bring this arrow. Do you see this arrow where it's pointing now? When it had gone out of the shark, that is indicator number 1. Indicator number 2 is that the Bollinger Bands had started squeezing. the blue, the blue, the blue. It had started coming together here. And the third point that will tell you that the market is going to reverse is we were within 50 and 30, which is the seller's zone. So it is a very good point for a reversal. And from there, do you see how long the market went? So if you are to scalp, like buy, you would have placed your trade after that when it was coming back into the Bollinger Band and go with it all the way up to around this, around here, when it was trying to crash and come back into the band again. So can you see how many pips that is? Let me bring an arrow. Sorry. That is not even where we were. Sorry for that. But yeah, guys, if you can see, see this again here. See this again. As much as it didn't go outside of the Bollinger Band, but the lower band acted as a resistance. Okay, the lower band acted as a resistance, and we were already past level 30. Okay, and immediately after that, it moved from here and came all the way up to here. No crashing whatsoever. You see, so this was still another very good trade as well. But coming down, we would not have placed it so much. Why? We could have placed a trade, yes, but not for long. Why? It came down all the way, but look here, look on the main chart, not even on the main chart. This peak here had not reached level 70, or it was not near level 70. So we would have placed a short-term trade, like from, the middle there, and come only to the middle of the Bollinger Band, which is now the market baseline, okay? And immediately it touched the market baseline, you were supposed to leave the market because it was not a major trade signal. So you would have just caught like 3 or 4 spikes, and which is around 45 minutes, because it is from, let's say that first spike came, so you could have gotten into the market at that point and traded all the way to this point. So that was basically like 3 spikes. Okay, but 3 spikes for 45 minutes, it's still good profit, because check the moment the market was going up here. It went up from this point up to this point. How many candles are those? 1, 2, 3, 4, 5, 6, 7, 8. 8 candles going up. 8 candles divided by 4, that is a whole 2 hours going up. And then the next 45 minutes, it comes down. So getting 3 spikes, same to 4 hours of going up, is still a plus. As much as we say it was not a major trade setup, but getting that spike of, those 3 spikes was still a major win. Okay, so that is another trade setup there. Here is another one. Here is another very good setup. Oh my God, this is the sweetest. This is the sweetest. Check this. Check this here. Shark fin. Shark in the water. So it's moved fast. It showed us here the bands were going out. Yes, it moved, it went, and then it reached a peak where it was now coming back again into the band. And by the time it was coming back into the band, we are already at level 70. Do you see that? So it was a very good place. Like, it will be crashing for long. So as it is coming back into the band, can you imagine how many candles this market was from this candle coming all the way, and here it dropped into the band up to that point. Okay, yes, when it reached level 30. Actually, just have it like if it is for crashes, it should be anywhere between the RSI coming back into the band should be between level 65 to 70, you know, and then the exit point should be around 35 to 25. You see this level here. So you're coming back into the band down, which is your exit now here, was exactly at level 30. So can you imagine this trade from there all the way up to here? How many pips are those? A lot. A lot. And you've just been in the market for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. And you've gotten a trade that would have costed you an entire day of waiting. Okay, and these are sure bets. Like I tell you, you cannot be more than 10 minutes in the red. Every time you place a trade, it will go into blue immediately. So zero drawdown and you get a whole 10 candles, that is spikes. Can you imagine how long it took? Like here, these 15-minute candles. Can we count going up? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So it took a whole, like, another 3 hours going up. And within that time, another 2 hours, it just came down crashing all the way. Okay? And you caught pips that was more than what would it, sorry for that what would have happened in a full day or half a day, and you got it within 2 hours or 1 hour, and you're out of the market. And these are sure trades that you can get them here to here. These are sure trades that you can get them, triple your account in a day, and be out of the market. You don't have to stay on your screen the entire day trading. Okay, so this is just one TDI strategy that I've uploaded here, understanding it that boom and crash respects the support and resistance point very well. It supports very well. It respects it to the core. So come into the market with that knowledge of small price action, and then now you come and use your TDI to execute your trades. Anytime the RSI is outside of the Bollinger Band, as it is finding its way back into the Bollinger Band, and we are either at level 70 or at level 34, boom, know that that is your buy point. And you can put that with proper money management, know that you are going to harvest a lot of pips. So that is it for today, and thank you. Thank you for all our newcomers. Thank you for subscribing. Continue keeping it locked here. We'll be bringing you more and more valuable information daily. And please make sure you subscribe to our channel and join our Telegram group as well, because we drop signals there daily. And I have a few people that are mentoring in my VIP group. So make sure to be part of it. I have so many other signal, indicators as well, like catching spikes, spike detectors, and whatsoever. So keep it locked to get premium content. God bless you and happy trading. Bye.